Hey, gang. Just want to make sure we've got good audio and video here. And welcome to Market Wrap with Raghee, in case the audio wasn't on before, which it may not be on right now. Let's see. Let me make sure here. I think we're good. Yeah, I think we are. All right, cool. I'll get the camera going for the next one. All right, so let's kick off what we've done in the mastery today and what I'm looking at as we're going through what could be a very interesting couple of days. Now, keep in mind, Friday, bank holiday, and Thursday is a half trading day, which also includes non-farm payroll. Tomorrow is about a vanilla a day as we're going to have, but it's going to be the last full trading day of this week. Let's talk about a couple things we noted as the S&P, NASDAQ, and Dow were moving. Now, the one to really talk about here today, and it might be a very interesting look at some sector rotation, and that is what happened with the Dow today. Up a lot stronger than what we saw in the S&P and the NAS. But what's really interesting about the Dow, and let me move this clock here, about where we're at right now, is take a peek. This is where we had stopped right in front of sort of this tariff tantrum sell-off that triggered in late February, early March. Now, unlike the NASDAQ and the S&P, the Dow is still under that level. But if today's action is reflective of anything, as a new quarter is starting and as a new month is starting, there was a lot of flow into this laggy index. Again, here's the NAS. NAS has already taken out those highs, right? We've already done that. NAS is already at all-time highs. So imagine you're managing money. You could either buy the NAS at all-time highs, or you could buy that laggy major index in the Dow as it's climbing to those levels. Which one has the ability to continue to climb a little bit more? Well, the Dow, right? It's not at all-time highs. It has yet to even take out the December or the February highs. So there's possibly more room to move. And again, if you take a look at how the Dow moved today, most definitely very bullish. Add to that, we're coming into earnings season again, and earnings season widely kicks off with financials. Right? That's when we start really paying attention, when that round of financial earnings are released. The number one weighted sector in the Dow are financials. The financial sector is the number one weighted sector. It's not industrials, it's not transports, it's financials, followed by tech, followed by healthcare, energy, industrials, transports. If financials are breaking out, which they are, this is a Darvis breakout that we have here, gang, from 3 sessions ago. So we have a Darvis breakout happening right now. That's going to help the Dow move higher as well. If financials are not on your radar for a potential dip buy, get it on the radar. And we'll talk about a couple of stocks that are worth watching. We've had a number of stocks, the mastery, that we're looking at for dips. Dips to where? Dips to the daily price movement range. All right, dips to that gray zone, which represents the support based on historical volatility. There are a number of stocks that we've watched in this group. JP Morgan is still one of the favorites. Schwab is still very much a part of the watch list in the mastery. American Express is another one that's starting to regain the trend as of today, so worth watching. And Citi. Now, the kind of symbols that we look at are symbols that are preferably in uptrends, preferably have the green top tier candles, at least 5 of them, and are both liquid in the open interest and what I would consider to be affordable. I don't want to ever say I'm trading for a small account. I don't believe in a small account mindset. And I'm not saying that I'm trading for a large account. I trade with a large account. What I'm looking at is open interest. At least, I like about 1,000 at the strike that I'm buying. And I'm typically buying I'm typically buying contracts that are, say, $7, maybe $8 or less, or less. Now, this means that a small account can maybe buy one or two contracts, spend $1,400 to $1,600, right? I like buying in groups of 3 because I ultimately am looking for 3 targets. But if you can buy 1 or 2, that's not a bad start. But if I'm buying, for example, a $4 or $3, all of a sudden, and it has sufficient open interest, all of a sudden a large account could buy 40 of these, but a small account could buy 4. So this is the scalable mindset that we teach in the mastery. And these are some of the names in financials that probably were a big part of that rally in the Dow today. And these are definitely on the radar for us in the Sector Secrets Mastery. All right, what else is on the radar? Well, we've been talking about gold and copper in the room quite a bit, but a couple things to note about gold and copper. First of all, gold does not have that criteria of the 5 candles. And if I don't have that, it's really not on the list. Not that there's anything wrong with buying dips in gold, but it's far more chop than it is trend. Now, when I'm looking at gold, I'm also going to think gold miners. Look at the structure here. Far more consistent, not perfect, because we do have this one little yellow candle right there, but far more clearly bullish than gold itself. So this is where we've been saying, hey, let's focus on gold miners and less on gold. Case in point, we've got a long position in Barrick. Barrick did hit the initial target today. We were looking for a 2120 scale out, the number of green candles. And yes, it's coasting a little bit after a prolonged period in the trend, but I would look for continuation. And that brings up another philosophy in the mastery that we use. I'm far more a fan of continuation than presuming that every top begs a reversal or that every pullback is a precursor to a trend reversal, right? Continuation is the profitable side of the mindset for especially a trend trader like myself. So when I have a trend that has now begun to coast, what do I mean by that? So I have an uptrend here, bullish Momo, bullish momentum, but now it's gone neutral. Okay. If you're flying down the highway, none of us are speeding, right? If you're flying down the highway and you just let off the gas, as long as you're not driving an EV, if you just let off the gas, you're going to coast. You're going to decelerate a little bit, but you're not going to stop. And you're certainly not going to make a U-turn for just having let off the gas. That's the mindset I have for that expectation for continuation after a dip. So Barrick continues to be an open position we have in the mastery. Another position, and we talked about the other day, is RTX. Now, when you're joining me for these market wraps, you're going to notice that I'm not looking at a brand new set of entries every single day. In fact, one of the things that hurts traders the most is not embracing time. All right. What do I mean by that? Well, if I'm looking at a daily time frame, which I love to swing trade, swing simply means I'm going to be taking a trade overnight. By not using time and thinking in just kind of an A to B type manner, get in at A, close out the trade at B, I'm leaving out the potential for C and D and just going into expiration if the trend persists. Great examples of that were open positions we had in Hood last month. That thing's still going. And I want back in on that ride, but I had to close the position because they were June 27 expiration. Right? But what if RTX keeps going, right? By having already reached, let's use it for this example, B, which is that first target, I still have enough contracts to scroll out at T2 and T3 if it can keep going. T2 will very likely be this 149.30 area because we might be coasting a little bit. It's still very bullish, but clearly RTX has let off the gas pedal. All right. All right. Another position is Mondelez. This was a position that we put on just yesterday in the mastery. Now, this one's a little bit different. So let me walk you through the breakdown of this particular trade. This is what I endearingly call pre-Momo. And the reason I call it that is, if you were a student of the work of Nicholas Darvis, which I was, it's amazing that we're still talking about Darvis levels like these. These 2 yellow lines are a Darvis level. If we're still talking about Darvis, long after this man has talked about a process that he discovered in the 50s, right? And he's not selling a newsletter and he's not on CNBC or whatever, right? And yet we're still talking about this. This thing has stood the test of time. If you're looking for a way to automate support and resistance, I can't think of a better way, more time-tested way than simply using Darvis. Now, I've modernized the Darvis process. It's not a traditional Darvis, but it's rooted in the principles of Darvis. So if I can identify a Darvis, which we did yesterday, and we trade down into the lower quarter of the range, that's really where we're looking for the entry. Now, notice I'm not buying with this candle. This is where we scaled out, right? This has been a monster move for Mondelez. But by buying pre-momentum, Darvis realized that when these Darvis boxes, I've just turned them into Darvis channels, but when these Darvis boxes formed, there was a high likelihood for momentum. And he was really a new high breakout trader. Well, if I know he's a new high breakout trader and I know that this pattern tends to lead to that, why not get in on the dip with the presumption of the follow through to come? That's exactly what Mondelez was. I'm not getting in now. I'm taking advantage of the scale out. And this is just T1 that we've only scaled out. I'm still looking at T2 and T3. And after busting up to a new high, which is what we've done today, my expectation, not immediately, but generally will be that we'll continue to see new highs. It's as if the machete cut through the jungle through this level, and now there's a lot higher likelihood for follow through. And by the way, why would I expect there to be follow through? I'm going to trust my gauges. Right? I don't know how many of you are scuba divers or pilots, but I remember the first time I scuba dived, and this was probably just under about 110 feet on a wreck here off the coast of South Florida. And I remember feeling a little odd. And everyone has a different level that they can get narked at. Imagine being drunk underwater. I know, not a fun feeling. And everyone says, hey, if and when this happens, right, trust your gauges. There have been people diving. There's a really cool ledge in the Bahamas, in Bimini, actually. And you can dive, you can bounce very deep. I'm talking over 200 feet. Not that I would, but you could. And when they get deeper and deeper, the likelihood for nitrogen narcosis gets higher and higher. Well, a lot of folks will say, you know what, if I didn't go back to my training, if I didn't go back to trusting the depth of my gauges, if I'm going deeper, a lot of people are so bonked out when they get deep, they start swimming deeper because they think they're swimming up, right? I think that happens to traders. I absolutely do. So trust your gauges. Would I expect continuation? My gauges, which I trust, are telling me that both the momentum is bullish and the trend down in here. So I'm going to continue to expect follow through, not to mention I've got at least 5 green candles in a row. Trading is not about certainty. It's about probability, expectations. And so I would have high expectations for follow through on Mondelez. A couple other symbols on our radar, URA, uranium, as well as CCJ. We've had a lot of different pullbacks. These two that are related to the nuclear, again, good trends, consistent green candles, and pullbacks. And we did this pullback in June as well. The pullbacks have been pretty powerful. This one's going to be tricky because we're not that far from the previous high. So really, to get that kind of beautiful follow through, I'm going to have to see not only 75 broken, I'm going to have to see some bullish momentum above that. But by buying the dip, I don't need a new high for follow through. I just need it to retrace its steps to a certain percentage so I can scale out of a winner. And then for a T2 or T3, after scaling out at T1, maybe there'll be a good chance for that follow through. All right. I know there's a lot of questions on names like, what happened to Palantir? Gang, don't touch it. Look at the candle colors. Wait for it to start to reorganize perhaps into a trend. Let's take a look at NVIDIA here. This one's a good one. This one I need a dip, but I need to see these green candles, beautiful, end up in this daily price movement range zone. Really important as well. There have been a lot of interesting pullbacks on some hot names, and that's where buying into higher highs can be such a tragic, if not very ill-conceived strategy, presuming right? That I'm going to be at a level where people are willing to buy behind me. It's kind of like that old saying in poker. If you look around the table and you can't find the sucker, right? Who's going to be the bag holder at a new high unless there's enough interest at higher highs to keep going? That's why, yes, breakout trading can work, right? But dip buying is going to give you a whole lot more choice. Where if I buy in the dip here, which is something I would be absolutely open to, just getting back up to previous levels is enough to see a profit. And then the next stage could be that momentum burst. And actually, even better than NVIDIA, I'm keeping an eye on semiconductors because there's so many stocks in the heavy weighted part of semis. Look at all the top 5 to 6 names. They're all in uptrends and they're all relatively spendy names. So if you can be a little patient, maybe keep an eye on SMH, that might be a really good bang for your buck. Okay, so I'm going to be here Monday through Friday doing recaps just like this of what we're doing in the Sector Secrets Mastery, trades we're alerting to members, trades that we're in, and hopefully this will give you an idea of where I'm looking and why, and the kind of things that we're doing in the Mastery. I'll be here Monday through Friday, 4 to 4:20 approximately, and walk you through these kinds of setups. If you have any questions in future shows, feel free to ask, and or leave a comment below. Thanks for smashing that like button. And I'll see you in the next recap.